This is a major exclusive. Talking to the management of Abbott India. Before we touch base with the management to understand their business strategy, understand the story behind Abbott India, its financials, what's driving the stock or not. It's illiquid, but still quoting at 8271 rupees per share. And what's the story essentially behind Abbott India? Vivek joins us with that.
Well, that's right. The one space, even before we saw the pharma rally starting in 2018, the one space that was seeing a lot of interest, especially among the HNI community and a lot of mutual funds, was the Indian MNC pharma space. And this was a space that was seeing a lot of renewed interest because it was clearly, playing the Indian theme. And some of the stocks just in the last 1 month have seen significant up moves. In fact, some of the up moves that you're actually seeing are in the range of 10 to 40%, even when the market has been correcting quite significantly. Now, if we're talking about Abbott India and what actually is the main reason for the strong outperformance of this company, there are a lot of parameters by which a pharma company, especially in India, is actually judged by. And Abbott India, is at the top of the scale, especially among all of these parameters. Top 10 brands of the company most of them are leaders. They're positioned at either number 1 or number 2 in the industry. The company has a very strong drug launch pipeline. Almost 110 products are planned over the next 5 years for this particular name. Look at the growth rate of the company. The industry growth rate is between 8 to 9% annually. The company has managed to grow at almost 18% in just the last 2 years. Employee productivity, again, an important parameter, highest as far as the industry is concerned. Low R&D spends because of the fact that the company has a very strong backing from the parent company. And also, if we're talking about the free cash flow generation, this is something that's doing very well for the company. Let's have a look at some of the drugs. And, if you're looking at the CAGR growth of these couple of drugs over the last 2 years. Its fertility drug has been growing at almost 26% CAGR for the last 2 years. The thyroid drug almost 20%. The Digene of this particular company, the Digene drug, almost 7.5% CAGR return in the last couple of years. So clearly, a 20% CAGR return is something that's extremely strong for even an MNC pharma company. Financials, in the last 10 years, company has managed to grow its revenues by almost 7 times, or profits by 6 times, and EBITDA too along similar lines. No wonder this particular stock is seeing a lot of favor as far as the markets are concerned.
Okay, thanks Vivek as always for setting the context to our conversation, and brings me great pleasure to welcome on board Mr. Ambati Venu, the MD at Abbott India Limited, for his first television appearance. Mr. Venu, pleasure having you on the show today. Thanks so much for taking the time out. Now, Abbott India has lined up over 100 product launches in about 5 years. Tell us, what are the kind of therapies or product lines that these product launches are going to be focusing in on?
We would like to deepen our presence in areas like gastroenterology, metabolics, women's health, central nervous systems, and vaccine.
Okay, so 21 new products already and product extensions at that in the past year. How have they performed, and will that lead to better growth in coming years for you?
It's too early to comment on the launches which we have just done in the last financial year. But as you would know, out of all the launches, some would succeed, some might not do as well as what we anticipated. But from the numbers what I see, out of the 21 launches we have had in the last year, almost 16 of them are doing extremely well, meeting our expectations and the planned numbers. And I certainly see a potential to grow them further in the coming few years.
But earlier, when a company launched products, it took time to mature and grow the product. But over the years, companies are building a strong distribution network of over 3,000 stockists and 1.75 lakh retailers. So any new product launches that will take less time to reflect in the growth numbers?
So we have a very robust distribution setup in this country. We partner with almost 3,000 stockists through whom we reach out to more than 300,000 pharmacies across the country. And these 3,000 stockists not only support us for our established brands, but also for all the new launches which we have launched in the last year and which we are planning to launch in the next 5 years.
But can you talk about Thyronorm, which is the drug for thyroid in India? What is the current market size? It is still very small. Do you expect it to grow massively in the coming years?
Okay. Look, when it comes to the thyroid space, and specifically if I have to mention the hypothyroidism, in my opinion, that is an area which is underserved in this country. And that's primarily because of two reasons. The first being the awareness levels, and the second being the barrier in terms of cost of diagnosis. The statistics show that if 100 people are the suspects for hypothyroidism, maybe 25 to 30% of the people possibly are being detected, diagnosed and treated. The rest, 60 to 70%, are still not aware of it. And therefore there's a huge purpose for companies like us to really bring about the awareness through various channels, be it the mass media channels or the digital channels. Also, we also work quite aggressively with various diagnostic centers to see how we can help in bringing down the cost of diagnosis so that we can serve the patients better. So the programs what we run within Abbott India, for example, last year alone, given our investments in building the awareness levels and working with the diagnostic centers in providing accessible diagnostic costs, we have able to screen almost 2.1 million patients in just 1 year. And that actually helps in bringing new patients to the doctors, getting them treated, and thereby addressing the health outcomes.
Company versus other MNC players have been able to gain market share. What has been the advantage of a direct connect with consumers using the technology, which has in a sense helped you to gain market share?
Okay, so in fact, Abbott has grown almost 13% the last fiscal year, and that growth has been compared to the industry almost 1.6 times of the Indian pharmaceutical industry. Now, this growth obviously happens because there's a full strategy behind in terms of driving this particular growth. And what we strongly believe is how do we provide a service plus approach to not only our doctors but also to the patients and the caregivers. And what I mean by that is we look at the entire continuum of care and say how do we serve the patient across the various stages of continuum of care. We also look at what interventions as an organization we need to provide in possibly helping in a particular therapy area in terms of awareness, in terms of diagnosis, treatment, and most importantly, compliance. So over the last few years, Abbott has done extensive work across areas like hypothyroidism, the non-alcoholic fatty liver diseases, in terms of threatened pregnancies, in terms of vitamin D deficiencies, and so on and so forth. And this is where we look at the entire continuum of care and try to identify where the problem or the issue is, and we therefore provide interventions using technology and, more importantly, digital tools to serve the patients, the healthcare professionals and caregivers.
Okay. So as the brand proportion increases within the portfolio, new launches will be evident. You will see a EBITDA improvement also a period of time. So our assessment about how this drug could be the wonder drug for Abbott, is that correct?
Well, that's something which is a continuous process which we as an organization do take care. The first and foremost is, whatever launches we do, whatever new therapy or sub-therapy areas we enter, we ensure that, we have, the right amount of margins in order to take this entire thing forward. If the margin profiles are not good and if it is going to dilute the overall margin profile of the organization, sometimes we take some hard choices and possibly not go with that. The second thing is there's also a culture within the organization in order to drive cost competitiveness and across all facets, not only within the cost of goods, but also the way we spend in terms of our SG&A and promotion behind our brands. We constantly evaluate the effectiveness of the spends, and therefore there's a very strong cost culture within the organization, which helps us to keep improving our margin profiles over the years.
Amongst all the MNCs and Indian companies, Mr. Venu, you have the best employee productivity as well. Do you think that efficiency will be the key differentiator versus other pharma companies?
Yeah, so that is also a part of our, the entire cost structure and driving, better profitability and better productivity. I don't have the exact numbers with me, but I did, look at a data where we had benchmarked our employee productivity across, similar organizations within the industry. And I do see that we have one of the highest employee productivity within the industry. And that is something which we consciously monitor, and we consciously try to optimize our resources in a way that we continue to drive that productivity to the higher levels.
Do you think that Indian pharma has seen worst of the impact? Price control, GST related issues, demonetization impact, is that behind us?
See, the overall pharma industry has been growing at a compounded annual growth of almost 11% over the last 5 years. With an exception of last year where we had, two big external, impact both from a demonetization and the GST rollout. Barring that, there was a very healthy growth over the last 5 years, and my personal opinion is going forward, I see that pharma industry would continue to deliver a strong double-digit growth going forward. And that comes from, the basic premise that in our country, healthcare is still a very underserved, topic. The health burden, the disease burden in the country is still very high, and therefore this industry will continue to grow because the industry will continue to serve for the patients, and therefore there's an opportunity. Having said that, the industry certainly would look forward to a far more stable policy environment and a robust regulatory framework, and that to me I think is extremely important for the industry to continue to grow.
Finally, do you expect India to be one of the high growth markets over the next 10 years versus the rest of the world? Given that you would do a fair amount of relative analysis on growth markets for the pharma industry?
I think my key message would be it's time that not only Abbott, as an industry, our whole outlook needs to change from just providing a pill to going beyond the pill in terms of services plus the pill. I think that would be the prime objective of most of the organization, and so is for Abbott. I think going forward, I think that will be our key priority and focus as to how across our therapies, how do we bundle up the services from a patient-centric point of view, be it from an awareness or a compliance or even from a lifestyle modification point of view, how can we assist the patients in order to drive better patient outcomes? I think to me that is going to be the game changer for the industry going forward.
All right. Thanks very much, Mr. Venu, for joining us and giving us those details, sharing with us your business strategy. It's been an absolute pleasure speaking with you this morning to understand Abbott India's India view and the growth plans that they have on Indian shores.